영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
A stock that just shoots through the roof. Big potential rewards, but also some pretty big dangers. It's not capped. You could lose far more. A check and balance. Then you saw chatter ramp up online.
You know, most investors, they dream about picking a stock that just shoots through the roof.
Right.
Make a killing that way.
That's the standard play.
But what if there's a whole other side? Making money when a stock actually goes down.
Ah, short selling.
Exactly. Today we're going to dig into short selling. It's controversial, definitely high stakes, and it can really light up the market.
Absolutely. Big potential rewards, but also some pretty big dangers.
So our mission here is to kind of unpack it all. You know, how does it work? What are the real risks? Why do people argue about it so much?
And we definitely need to talk about the short squeeze phenomenon. That gets dramatic.
Okay, so the basic idea, short selling. It sounds simple enough on paper.
It does, deceptively so.
You borrow shares. Let's say they're trading at $100. You sell them immediately.
Right, sell them on the open market.
Then you wait, hoping the price drops. Maybe it falls to $50.
That's the goal.
So you buy the shares back at $50, return them to whoever you borrowed them from, the broker usually, and you keep that $50 difference per share. Sounds pretty neat.
It sounds neat, but you touched on it earlier, the complexity, the hidden dangers.
Yeah, is it really that straightforward? What's the catch?
The catch is huge. It's the risk. Unlike buying a stock, where the most you can lose is what you put in.
Right. If it goes to zero, you lose your investment. That's it.
Exactly. With shorting, if that $100 stock goes up instead, say, to $150, $200, $500, who knows?
Oh.
You still have to buy it back to return it, but now you're buying it at that much higher price.
So you're losing money, and the potential loss is...
Unlimited. Theoretically infinite. The higher it goes, the more you lose. It's not capped. You could lose far, far more than your initial bet.
Wow. Okay, that's terrifying. Unlimited losses.
It really changes the game. And that's why it's so debated, you know?
How so? What are the main arguments?
Well, what's fascinating is you have these two completely opposing views. Supporters will say short selling is crucial for the market.
Like, it keeps things honest.
Sort of. They argue it helps expose companies that are maybe overvalued or even fraudulent. It helps get prices closer to their true value, a check and balance, if you will.
Okay, I can see that logic. But the critics...
Critics see it as predatory. They think short sellers actively try to drive prices down, sometimes spreading negative rumors, shaking confidence.
Especially when the market's already shaky.
Exactly. They see it as destabilizing, not helpful. Same action, totally different interpretations.
Which brings us to the short squeeze. This is where things can get really wild, isn't it?
Oh, absolutely. Explosive is the word.
So explain that. How does a squeeze happen?
Okay, imagine a stock that lots of people are shorting, betting against it. Heavily shorted.
Right.
Then for some reason the price starts to go up instead of down. Maybe good news, maybe just market momentum.
So all those short sellers are suddenly losing money.
Big time. And their losses are growing. So they get nervous, they need to cut their losses. What do they have to do?
They have to buy the stock back to return it.
Exactly, they're forced to buy. But all that buying pressure pushes the price.
Even higher.
Right, which forces more short sellers to buy back, pushing the price higher still. It's this powerful feedback loop. A squeeze.
And the most famous example is GameStop, right? Back in 2021.
Definitely the poster child. You had retail investors coordinating on Reddit, piling into the stock.
And hedge funds that were shorting it lost billions.
Billions. It was unprecedented.
But it's not just history. You mentioned Kohl's July 2025.
Yeah, a more recent, maybe less extreme, but similar dynamic. Kohl's reported an okay quarter, nothing spectacular.
But the stock nearly doubled.
Almost doubled in just a few days. And interestingly, just before that spike, about half its trading volume was from short sellers.
Wow, 50%.
Then you saw chatter ramp up online, places like Wall Street Bets again. Retail investors jumped in,
Forcing the shorts to cover.
pushing the price up. That classic squeeze dynamic, fueled by social media this time.
It really highlights the power of collective action online now.
It does. But the Kohl situation is also a good reminder. These things often don't last.
What do you mean?
Well, once the frenzy dies down, the buying pressure disappears, the price often falls back down pretty sharply.
So people who jumped in late can get burned.
Very easily. It's a cautionary tale, which naturally leads to regulation. You can't have this kind of potential chaos without rules.
Makes sense. What kind of rules are there?
Well, short selling is regulated pretty much everywhere. In the US, for example, if you have a large short position, you generally have to disclose it.
So people know who's betting against a stock.
To some extent, yes. And brokers require margin accounts. You need to have funds set aside as collateral, basically, to cover potential losses.
Oh, okay.
And there are new SEC rules coming into effect, actually, adopted in 2023, starting February 2026. They'll require public reporting of certain large short positions, more transparency.
Interesting. So bringing it all together, for the average person listening, short selling isn't just another investment strategy, is it?
No, definitely not. It's a high-risk game. It takes skill, timing, a lot of discipline. You can make a lot of money, yes. But you can also lose, well, potentially everything and more.
So that's short selling?
Mhm.
It's definitely counterintuitive, incredibly high risk, but plays this really significant role in how markets work.
Hmm.
And sometimes leads to these absolutely crazy events like short squeezes.
It adds a whole other dimension to the market.
It makes you think, doesn't it?
Yeah.
About these complex financial tools, but also how something like, online communities talking on Reddit can suddenly create these massive volatile swings in the real world.
Yeah, the intersection of finance and social dynamics is fascinating.
What other forces like that might be out there shaping things behind the scenes that we aren't even really seeing yet? Something to ponder.
영어와 시사경제 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.